welcome back to the Dividend Diplomats YouTube channel. Everybody, this is going to be interesting. We found a stock that's down 6% over the last 5 days. When the market is on fire, this company is down, but that's not the best part. The dividend yield is not 1%, not 2%, not 3%, not 4%, but 5%. We are pumped up. We are hyped to talk to you about this company yielding 5%, halfway to becoming a dividend aristocrat.
Guys, before we dive in, smash the bloody piss out of that subscribe button. Give Bert and I a nice thumbs up. We are the Dividend Diplomats brothers, and we are recording this video July 27th. We are out here reaching the millions and millions of dividend investors out there, reaching financial freedom, adding passive income, buying dividend stocks, guys. The duo is back. And Bert got an action-packed 5%er for your portfolio, brothers.
Yeah, I thought so let's take a step here. We thought the S&P 500 in the stock market was going to be pulling a Joe DiMaggio here and just keep winning for over 50 plus days in a row because this thing is on fire. But finally today, it cooled off. It finished down today. So at the time of this video, the S&P 500 is at just over 4,500. So it's still insane. It is insane how hot the market is. But finding a undervalued stock is very, very difficult, but it is not impossible. We are turning over every stone, every leaf, whatever it is, we are doing it. We're going to try and find an undervalued stock to buy. And this one's been picking up some momentum in the FinTwit DivTwit community. So we decided it's time to take a look, see what's going on, and run them through our stock screener.
That's right, Bert. I know the stock here has been a few comments on the videos. I know you guys are probably excited that we're covering it today. Again, show some love, like the video. Let's get this thing in fuego here on this beautiful Saturday morning, guys. Bert, are we diving into some homes right now and to see certain types of products from a brand that might be in a lot of your, maybe check your refrigerator, maybe, I don't know, your washer, maybe a dryer. What's going on here, Bert?
We're talking Whirlpool, ticker symbol WHR. The major compliance company is down. They have been down 6% over the last 6 days, 1% year to date, but the big one down 19% over the last 52 weeks. That's why we're looking here. And what caused the company to drop? Their earnings release. They just released earnings this last week. Sales fell 6% to just under $5 billion. The total after currency, it was about 5.6%. The big one was North American sales were down 4.7%. European sales were down.
Home buyers slowing it down. Yeah. Real estate market's turning down. Let's go.
Yeah, and not just the real estate market, though. If a recession is coming and consumer spending is tightening, those major consumer purchases, those consumer discretionary purchases, such as a new washer dryer, those are going to be the first ones to get chopped off. You're going to stretch your old appliances a little bit longer instead of buying those new ones. So that's the leading cause here of sales dropping.
Get the old bucket and water trick.
Yeah, they're gonna start handing out the boards.
Get the clothesline going. That's right. Get the drying racks, guys.
Yeah, and that's what's interesting though. But
Bert Luger, the torture rack.
That's how we dry all of our towels in my house. Just shake them out. EBIT was down 23%. Free cash flow was down. But okay, so it was a shitty earnings release, for lack of a better term. It wasn't great, but there was
like they are throwing pieces in their dryer and seeing what's coming out the end.
Yeah, but the good news was they reaffirmed their guidance and it was still looking strong. Full sales are still going to be
still great.
19.4 billion versus the 19.2 consensus. Earnings per share is still ranging from $16 to $18 per share, a hair above the consensus of $15.99. And cash provided from operations is 1.4 billion versus and free cash flow is going to be 800 million. So despite the poor quarter, despite the worse than expectations, the guidance is still coming out strong from there. So that's why it's catching the attention of so many people, and now it's on our radar here, and that's why we're going to run them through our stock screener right now.
Guys, and you guys know we focus on the price to earnings ratio less than the S&P 500, dividend payout ratio preferably less than 60%. 3, the length of dividend growth, because we want that passive income stream to grow like big Papa Pump style. And we look at the dividend growth rate on average. And then we look at the dividend yield as a little sweetness on top there, guys. What's going on with Whirlpool? Down 19.31% in the last year, up 5% over your last 5 years, obviously trailing well behind the market. And Bird, the stock is well under $150 a share now at $141.78 at the time of this video, which really speaks to where they were trading at somewhere over, what, 170, I'm assuming?
Yes, they are coming down. That is for certain. Yeah, at their peak, Whirlpool. I'm looking this up now. I'm pulling up the chart because I didn't have that one ready here. At their peak back in 2021, it was 246.
Wow, guys, how about that, Jack? So,
Yeah.
guys, what's that? Or what was that earnings? Consensus mark right now.
15.99. So that's what we're going to use here. So
All
that,
right.
yeah, that's exactly what we're going to use here. How about that, Laney? Just think about that, Jack. So that's going to give us.
I'm not. You listen up, brother. If we want to really talk about the price to earnings ratio on that, you already know that it's going to be below 10 because of that EPS, those first 2 digits higher than the 2 digits of that stock price. It is below 9 at 8.87. Oh, yeah, yeah.
So let's look at that payout ratio. Dividend $7 per share. Divide that by the 15.99. That's a perfect payout ratio of 43.78%. Beautiful, right in that perfect range of 40 to 60%. Lanny,
Yeah, pretty good.
Yeah, why don't you tell us about that dividend growth rate, Lanny?
Why don't I, Bert? Why don't I take it from here on the
Please,
DGR,
please
guys?
do. Please do.
Guys, it is at 9.5% over the last 5 years, and they've been increasing it now for a dozen plus years. So ever since coming out of the financial crisis, let's say.
Yeah, and their last dividend increase was February 2022. It was a 25% banger. So they hung tight this year. They hung tight in this February. They're slowing it down. They haven't increased it yet this year, but the last one probably made up for it with that 25% banger.
Interesting. So haven't increased it yet this year. Now, will they still be considered a growth rate? Is that how the dividend plays if they don't increase it this year?
It's a good question because technically, since they increased it in February.
Oh, whoa. Yeah, they won't. So they really
Yeah.
need to squeak one out. They've got 2 more quarters, guys. They either going to do it in August or they can still do it in October with the declaration. So they have 2 more swings to increase that dividend to consider the streak alive, Undertaker style.
Yeah, so we'll see. I think these are going to be some telling quarters. If the earnings turn around, if they hit those consensus, I don't see how they can't squeak out a dividend increase to keep the streak going. We'll see.
Well, we'll have to find out.
Yeah, but their yield now with the price climbing down is just under 5%. It's at 4.94%, which is very high right now, especially compared to the S&P 500.
Yeah, so there you guys have it. 9 PE, 43.78% payout ratio, 12 years at almost 9.5% dividend growth with the yield just under 5%. Are you buying Whirlpool stock, Bert, the hurt?
I mean, look, it's on my watch list now. I'm not gonna lie. I mean, there aren't that many great undervalued dividend stocks right now. So it's definitely earned a spot on the watch list. I can't say why not. And the price continues to fall. The metrics might just speak for themselves to the point where it is an absolute no-brainer to buy Whirlpool. I don't think it's too far off from that range.
You might not be in the market to buy a refrigerator from Whirlpool, but you might be in the market to buy some Whirlpool stock, is what I'm hearing.
Yeah, what do you think, Lanny?
Keep an eye on it. Not rushing to buy, right now. Just, it would be a new position for me, so it's part of it.
Yeah,
So
nope, that's fair. It'd be for me too. That's why I think that's the hesitation there. It's understood, but at a certain point, do you consolidate other ones, move them into Whirlpool, or do you just say I'm going to get a new position? That's the fun
that's
of it.
right, guys. Well, what are you guys doing out there in the community? Let us know in the comments. Are you buying Whirlpool stock? Is this a stock to buy right now as we enter the month of August next week? What else are you guys buying to add a punch to your passive income portfolio?
If you haven't already, subscribe to the channel. give this video a thumbs up. And remember, if you are not with us, you're against us, Jack.
And that was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.